it going, boys? How is everybody doing? Hope you're all having a great evening. Hope you are ready for what is sure to be an eventful options expiration Friday session tomorrow. Let's get through this real quick so we can get into the important stuff. All right. Sell-off in equities deepened on Thursday, helping to confirm a top in the index, but all is not lost. The S&P 500 is still showing support at the short-term 30-day moving average, and of course our key 3900 that bounced today, where it may be able to stage a comeback. The catalyst that could do it is earnings and economic data due next week. The Q4 earnings reporting season hits high gear next week and brings reports from Microsoft, Verizon, Johnson Johnson, Tesla, Boeing, Visa, just to name a few. These are all bellwethers for their respective industries. The economic calendar is also full next week, but the only report that matters comes out on Friday, and that is the PCE price index. The index should confirm a peak in inflation, and it may fall more than expected. The risk for the market is that inflation may subside, but not brighten the outlook for 2023 and cap any gains that may form. The takeaway? Well, we all know what the takeaway is. Takeaway is the consensus figures for the forward market moving figures, earnings and such, are more important than ever. Does that mean that no more technicals? We're going to a fundamental market? I think not. But I think it will matter more than most are giving it. And I mean, we saw last year, the year of seasonality, if you want to call it that. So why not? Why not? Why couldn't it be, right? Let's get into things here. So updated chart here. You guys will see this here shortly in the recap room as well. Just want to show a few things that we are highlighting here. These levels never change. Nothing on here changed. Every single thing is here for a reason. I do lighten and darken them as per where we're at. One thing I did want to highlight here that we did brighten since last night will be this lower channel here that is basically showing this major support channel here, and highlighted is going to be that key downside target of 37.75, 37.55. We won't talk about it too much today. There will be a little bit on the battle plan stuff as far as downside targets, but we will get into that on the longer weekend video this weekend. We'll also talk more about this failure invalidates current uptrend that's been on there for a while. Core downtrend line, we've been talking about it for a while, and obviously it mattered a lot, so we're not going to get too much into that, but I just wanted to address those real quick. But before I get into the crux of the matter here, let's go ahead and drop down on this 30-minute. Zoom in for the kids so we can see the intraday move, because we're going to be talking mostly about last night and obviously today, looking into tomorrow, of course. All right, let's get into it. So, of course, just as expected it would, endless cycle between clean trending markets and the alternative messy chop mode continues. We ended last week again and started this week with the 3 days of sideways trappy, poor follow through, trappy chop mode between the infamous 4,000 and the 4020. Talked a lot about this yesterday, of course. Yesterday, we broke it down, starting a lucrative, clean, one-directional trend move, and just what comes after trend, fam? That's right, more chippity, choppity, chop, chop, chop. And we spent a good 3/4 of today ping-ponging between 3,900 and 3920. Markets only spend about 15 to 20% of the time trending, while the rest is living somewhere between in chop land, and therefore learning how to trade chop is a very critical set for any trader. The core reality, though, is that not all trading environments are created equal. While traders love big follow-through days like yesterday, where price makes large, clean swings, on most chop mode days, like most of today, it does not matter if one does everything perfectly. There will be a higher rate of stop outs, lack of follow through, and on most moves, and more quick intraday adjustments needed to grind out a gain. It's the nature of this type of market, and as our job as the trader is to adapt to it or sink like a stone. Remember, guys, our core principle is always starting with the idea of no FOMO, and we always want to be looking to take most of our profits at that first level up or down from the trade entry. And this allows us to grind out gains in choppy conditions where most moves fail at level 1, if they even get there. We aren't concerned about missing moves. You won't catch them all, and honestly, trying is very costly and will absolutely overwhelm and tire you out very quickly in this game. So despite all the chop though, something important did happen today. We backtested 3900 again, as we have been discussing, and again, it did rally back out. If this pullback is indeed corrective, rather than the start of a new leg down, it should defend this 3900 level. 38.85.75, basically the lowest. And let's back out and you see why. So this is basically that blue trend line that we've been talking about, right? So it should defend this level. If that 38.85.75 lowest, which again is the core rising channel from October's low in blue here. So today, so far, it did. Big picture, the rally from October's low remains intact as long as above those two levels. But 3900 has now been backtested twice just in 2023 already, and therefore now should be viewed as weakening. Today's bounce is likely the last chance for bulls at this level, with it likely to fail on the next test. If it does test again from here near term, it's more than likely to break, guys. We want to keep a close eye on that. Given this scenario, probability is leaning here that as long as 3900, ideally this 39.15.20 where we're just slightly above here overnight, can continue holding, then this final rally off the 3900 can continue a choppy move back up to that 39.45, which is right here where we see that near-term supply, where you can see all those wicks here on the 4-hour. Let's zoom in on the 30-minute here, get a little bit closer. So we, just like we've been moving here, we get a little choppy move back up to this trend line again, where you can see these wicks, that 39.45, where we'd want to see this near-term supply be absorbed. We want to see acceptance there, and then we could continue on to see the next move from there up to this light orange trend line here, where we saw some consolidation, where Jacob and I were covering some of our volatility on the way down. This is where we'd be looking to take a good amount of profits on the way back up, which is the 39.60. As always, though, no crystal balls. We'll be reacting to our battle plan level to level, one move at a time, following price, whatever way path it chooses to show us on the chart, right? But these are basically our ideas. So this is the way up, target 1, target 2, way down. We know if this breaks and is confirmed, we then go down to that 38.85.75 core trend line. That breaks, we continue falling back towards those further downside targets. We mentioned we would be getting short, low 39.90s with the 39.45 target yesterday. And as we described yesterday, we exited the short into the end of the day, right around that 39.45 for one of the better trades actually of this year so far. Chop periods like we had for the prior week can certainly be frustrating, but as always, make it worthwhile for traders via a breakout move afterwards if we can stick it through. That is a key. It does not pay to get angry, get mad at the chart, look at things that negative way. You've got to be setting up, sell some premium if you need to. It really holds me through those lows. And then when we get the break, when we get the trigger for the big trend move, I've stuck it through. I'm ready for it. I see the signal, boom, I'm going to capitalize and I'm going to take a directional trade. That way I'm making money on both sides. And in this fact, on all three sides, as we talk about. Most talk about two sides, up or down. We like to talk about three, up, down, and nice and flat. There is money to be made on all three scenarios. 39.45, though, was key support, as we talked about many, many times yesterday. And we spent hours basing here into the overnight session, which honestly was a very bad sign for bulls. And at that point, it was giving us the signal that the next short setup was likely to, and it did, trigger. Talked about how the bear case began on the loss of that key 39.45 and that we would be looking to get back short. The entry, as it has been, basically that 39.31 gravity point, and this scenario triggered just around about 1 a.m. after this, a couple hours after we posted the video last night, and played out nicely to that 39.20 next target down, and where I was getting out, right? We alerted last night to watch the 3900 being the strongest level, and that we would try a long there, and today just about 11:50. It was a little bit after this noon. We saw the internals curling up. Great catch by Money Moves there. He called that out in chat in real time. We decided to take that long where we would, right? So we took this trade for basically our only main intraday play of the day. This got back to that 39.20 first level up where we managed, as always, took 75% off, left a runner, and this followed through very nicely into the afternoon. This got to the 39.45, few points shy of the high, next level up. And then we were more than cool with exiting the runner right around the 39.31 gravity point on the way down as alerted in chat. And at that point, called it a day. So we played it down to that 39.20 where we took profits. Yeah, dropped another few 20 points. Cool with missing that. Then during the intraday play, that 3900 was holding and it bounced, and confirmed by internals, it started to curl back up, and we got long from there, taking profits on the way back up at that same level, 39.20, first level up, left the runner, hit that 39, just shy 39.45. And as we came back down, once we knew that it was confirmed with time of day, it was going towards the end of the day, that gravity point, once that starts to go, we're not going to hold past that. I'm going to take profits every time I can at above there, depending on which direction we come from, that's how we're going to play those gravity points. After hours, Netflix had earnings. We watched that on stream, added about 7.66 million subs and topped estimates, seeing a nice 7 to 8% after hours move that so far has held. In the morning, we'll see a few smaller financial names, but obviously all eyes are going to be on the options expiration. We will be watching the Netflix post-earnings play. It hit the 345 level before backing off, so we'll watch that expected move on both sides of the straddle there. And then obviously we are going to be watching overnight here. And so far tonight, the Asian Pacific markets are currently, let's take a look. They just printed, trades higher with economy in focus. I can't talk there. Hang Seng up about 1.5. The ASX about 0.57. Looks like the SSE composites up about 0.74. The Kospi is up about, 0.63. And it looks like Japan's got a little bit hit in some technology, but we can look through this real quick. Major indexes in Asia Pacific region traded higher on Friday after the People's Bank of China announced its decision to keep the benchmark lending rate unchanged for the fifth time. Wow. Earlier it was revealed that the inflation in Japan remained unchanged in December compared to November. Meanwhile, the I can never say that, Archipelago country's Prime Minister Fumi Kishida ordered the downgrading of COVID-19's seasonal flu. So good news over there on the macro environment from Asia. We'll see where that leads us tonight. A little bit of news in the crypto sector. We've got some stuff going on there. As Brandon pointed out, I'm going to update everything as far as the big markets. We wanted to wait till options expiration was through because it's going to shift a lot of things, especially in some of the bigger markets. So we're going to wait till this weekend. We will be having our weekend videos from now on again. Start those up once again this weekend. They'll be a little bit longer than these. These are supposed to be about 10 to 15 minutes at the most. Those weekend videos will be about like 20, 25 minutes with a little bit more in depth. But we will also have the live sessions on Sundays, which will be either trimmed into videos or just a complete separate video at that point. Yeah, so that's where we're at tonight, guys. We'll have the battle plan up by 9 a.m. We'll be on markets before that, but we will start at 9 a.m. with going into detailed nuances of the battle plan for tomorrow, what we'll be watching, where we're watching, what we want to see, what details we're watching, triggers for up and down, and a few ideas that we are watching for, of course, Friday Lottos. We'll probably only have one or two, like we've been trying to keep it really nice and tight, only giving those best A++ plays that we can find, if any, but we've been lucky. Obviously, there's always going to be one or two. But yeah, have a good night, guys. We will see you in the morning. I hope to see you as many on as possible. Have a great night, and cheers, boys. I think we're in for a decent session in the morning for sure. So get some sleep. We'll see you guys in the morning, and I hope everyone has a great night. And let's send off into the weekend on a good note, boys.